Last week was the worst week for markets in all of 2024 so far. The S&P 500 just last week lost 1.5% of its value. First, we had a much hotter than expected inflation report. Core CPI increased by 0.4% month over month and was up 3.5% from a year ago. Markets weren't expecting this and were hoping for more favorable news and didn't get it. Hi, I'm Jim Dunlop, a founding partner here at Advent Partners, and this is a quick market update. Let's be clear, markets want inflation to drop so that the Federal Reserve can begin cutting rates. Well, this would have the potential to have positive effects on both stocks and bonds in the short term. Let's not forget the Fed is unlikely to cut rates when inflation is persistently sticky and the US economy continues to expand and grow nicely. Our economy continues to be incredibly resilient, which is good for all of us in the long run. Yes, rate cuts could be a nice boost in the short term to our portfolios. However, the long term, we want and we need a strong US economy. As investors, a strong economy with low unemployment is generally good for everyone, even if it means interest rates remain a bit higher longer than markets want. I also think markets are starting to show concern over the very real potential of the conflict in Israel and Gaza expanding across the broader Middle East. Iran's drone offensive over this weekend could be the type of event that ends up bringing more players into this conflict. It becomes perceived that the US too could get more deeply drawn into that conflict. There's a good possibility that markets would react negatively as it creates uncertainty, and markets hate the unknown. For now, let's stay focused on the long run, which is generally positive, although sticky inflation could ultimately become a big weight on the US economy. Thank you and have a great week.